Welcome back on Real Ag Radio. We are in the Bear Crop Science booth on trade deadline day at Ag Expo, having a great time, and thanks a lot for joining us. It's Ag Expo happens always this time of year, and it's always a fun time, and the weather can be crazy. We can either have snow and crazy blizzards to minus 30 to, there's one year it was like plus 20. So this is welcome to Southern Alberta weather. Right now we are joined by Jon Driedger. He is a market analyst with FarmLink Marketing Solutions, and we're going to pin him down and talk to him about what is going on in these markets. Jon, how are you doing today?
Doing fine, Sean.
Yeah, you enjoying Ag Expo?
I love an Ag Expo. It's a great show.
So how many shows a year do you do?
Oh, we do certainly more than a handful across Western Canada, and then there's also a lot of meetings, courses, outlooks, regional things. So basically spend pretty much from the end of October to the end of March on the road, almost nonstop.
When do you have time to do any analysis?
We got a great team in Winnipeg, so they feed a lot of information and push a lot of information out. Thank goodness there's a whole bunch of us in there putting our heads together.
Yeah, okay. I'm really starting to notice people seem a little bit getting loftier and how they feel about this market, which fundamentally doesn't make a lot of sense to me.
Yeah, no, that's true. And so there definitely has been, I would say, maybe a bit of a shift in, I'd say maybe around the narrative, at least from a sort of an outside fund speculative money perspective, in the sense that so kind of you go back a few months, soybeans already kind of had a long, decent long position, net long position, but you started getting too much rain in Argentina for a spell, and they sort of started to add to that position, and they started looking ahead and maybe expectations about maybe fewer corn acres in the U.S. and what is spring weather going to be. The funds had a big short position in corn, and they sort of even those out now, plowed in the long side. Wheat, record large short positions by the funds, and then they look at century low plantings of winter wheat in the U.S. And so it's kind of like the narrative sort of shifted, and there's been a tendency to want to kind of move in on the long side in the grain markets, and that's more from an outside market perspective, because you're right, from a fundamental perspective, we still got big stockpiles coming in. South America's going to have a record large South American crop, soybean crop. Of course, who knows what weather's going to be this coming spring, and that is an enormous factor. Maybe some weather premium is warranted, but if we get decent weather in the U.S., for example, there's not a reason fundamentally to get too bullish, generally speaking.
Is soybeans the one that you're the least bullish? Is soybeans the one, because we're talking record acres. We got, 88 million projected by USDA. Some people think that it could even be 90, which would make it even with corn. I don't know.
Certainly with soybeans, I think we got to be a little guarded about how exuberant we get. And to balance that, we do have enormous demand, and so there's sort of always that underpinning when you have really strong demand. But then again, so much does come down to yield, and even a moderate swing in yield lower, for example, than what people are sort of anticipating. You can wipe out a lot of acreage increases pretty quick if you get you'll get some weather concerns, some hiccups, and those sorts of things. But at the same time, you're right. We got a decent-sized carry-in coming in. Global market's going to be competitive with big South American crop. If the U.S. dollar is strong, it's going to be hard for U.S. to stay as competitive and maybe export more beans. If we have big yields, it's going to be we got to be a little guarded to the downside on soybeans from a fundamental perspective. If the weather's there in the spring, certainly.
Does that mean we also have to be cautious on canola?
To a certain extent on canola as well, but canola has a bit of its own story. First of all, we're not going to have a big carryout coming into this next crop year with canola. We're going to record large crush, huge export demand, and so last year we sort of pulled off a record crop of canola, and yet we're going to probably shrink carryout stocks a little bit this year because demand is so strong. And so canola does have a little bit of its own story. Obviously, it's not an island unto itself, right? There's that spillover influence, but canola does have its own story, which would help it, relatively speaking. And if in fact there is some of this biodiesel policy that does come through that's going to help vegetable oil prices, that would, relatively speaking, help canola as well. So not to be complacent about it, certainly. Obviously, canola still needs to be competitively priced, and if soybeans are heavy, that spills over. But there is an element for maybe some, holding up relatively better, which makes us a little less concerned about canola specifically.
Okay, so we're talking ourselves more bearish. We're confirming our bias a little bit. But I got to ask you, we've covered this week on the radio show about the issue with India, right? India saying, "Listen, Canada, don't fumigate. Don't worry about it. We don't want your pulses anymore. If you're not going to follow our rules." Pulse Canada's been working very diligently on it. We had Gord Bacon on the show on Monday talking about it. There's a delegation headed over that includes the federal ag minister, Lawrence MacAulay. What's happening with new crop bids? they must be just like shut off.
Yeah, the whole pulse market has gotten real quiet, and an element of that as well is when you have uncertainty, just naturally, buyers are going to sort of rein in a little bit and sort of sit on their hands and wait to see how things shake out. So, there's a certain element of not that there's going to be no demand or interest for peas or lentils or something as you start looking ahead 3-6 months, whatever the case may be. But certainly from a buyer's perspective, end user's perspective, why would you take on that risk given the uncertainty? We're going to have some larger carryouts. India's going to probably have a bigger crop, so from a fundamental perspective, certainly some of the real frothiness that has been there in pulse markets, fundamentally you could say that there's a reason why prices have pulled back. Is it going to be catastrophic? Well, I think that's maybe too pessimistic. But from a buyer's perspective, why would you sort of stick your neck out and take on risk and wait for some smoke to clear and then, kind of reassess once there's, maybe some more facts? I know groups like Pulse Canada, some of them work real hard, maybe some confidence that at some point things get sorted out. But in the moment, it's hard to know. And naturally buyers are just going to rein in and wait to see how things shake out.
Here's what I don't understand about this whole thing, and maybe you can shake this out for me. The timing is incredibly strange to me. Why would India do this right now? Because here's the outcome I see. They don't have resolution before seeding. People plant less pulses. Means there's less supply. 50% of what they import comes from Canada. They're pushing the price up, and then they're going to have to buy cheaper inventory. So, or am I totally missing the boat on that?
No, I think one of the elements is, they are sort of on the cusp of having their own winter harvest for pulses. And, acres were up, they're going to probably have a larger crop. And so, there's a certain element of that perhaps in play. And so, they've bought a lot. And so some of those dynamics are there. But certainly, you'd think maybe perhaps from a bigger picture perspective, why would you push prices down overseas, for example? Maybe it'd be their interest to kind of keep prices up a little bit and keep sure acres are going in and so forth. But, sometimes these things aren't always necessarily that strategic in a way, perhaps, and the thing is with pulses, it's sometimes it can get emotionally charged in a market like that. It's such an important food staple. It's so critical to feeding this country. They're the world's largest producer, consumer, importer of it. And when it comes down to policies and politics and some of these things, it's not out. It'd be nice to sit there and say it's all sober, rational, scientific analysis, how these things get sorted out. But we've seen many times in the past, not just with India, but other countries, there's elements below the surface that are not just based purely on science.
Is there a commodity we didn't talk about that you want to chat about? Like you got some commentary on the sheep market or anything like that, or maybe the goat milk market or anything like that? What about the Canadian dollar? Because that is really, if you look, that has helped us. If you compare the financial situation agriculturally in the U.S. versus Canada, the dollar has really bailed us out. It's helped the feed yard industry because it's been dropping. So where do you think going forward we could be on the dollar?
Oh, you're right in the fact that that weak Canadian dollar, it's been a big benefit. And even over the past few days, we've been off about $0.015 or something like that. And sometimes it's easy to lose sight of that when futures markets are trading all over the place, and you quietly, you sort of tack on 2% of value from a straight currency perspective, and it makes a big difference. So, I think from a Canadian dollar perspective, as long as there's sort of this rosy outlook about economic growth in the U.S., the spillover effect on interest rates and those sorts of things are going to keep the U.S. dollar up, and that's just going to keep some pressure on Canada, especially if we drag a little bit from an economic perspective. There's not that same incentive for rates to go up here, and if you get some divergence from interest rate outlook, that's going to affect our currencies. Crude oil, probably hard to get a real bull run in crude oil. There's just too much supply capacity there, and so all those things probably keep us, I'm going to say probably flat, range bound, maybe edging on the softer side if I had to guess, which is good.
It's all the people buying all these electronic cars that are screwing up the crude oil market. What's going on? I don't understand it. So I know you're a big hockey fan. Before I let you go, who you picking for the Stanley Cup this year? We're on trade deadline day. Deals are being made just like they are in the markets. Who's your pick? And don't say the Jets, because I will argue with you. The Jets have no chance, and you're being a homer.
No, that's a faint hope clause that they even make the playoffs, so we won't even go there. Washington looks awfully good in the East as they picked up Shattenkirk, and Minnesota's looked strong. It looks like they're playing real well. Maybe they finally turned the corner. Kind of keep one eye on Chicago. They're going to be a little more rested. They're sort of bringing the old band back here a little bit. You can never count them out.
I noticed you didn't say the Flames. That's John. I'm hurt, disappointed, and I'm questioning all of the evaluation we just heard.
I will cheer loudly for the Flames as a fellow Western Canadian prairie hockey town, but we've got to be realistic. As an analyst, you got to strip the emotion away. I can't pick Flames in the hockey pool, but we'll cheer for them. How's that?
Well, I hear you there, but what I am glad is you didn't pick the Oilers. So I'm very happy about that, John. Hey, John, it was great to chat with you. We don't get to do this as often as we sometimes we want to. We're both busy, but I really appreciate you taking the time at Ag Expo here and coming over to the Bear Crop Science booth to do this. I had a great time with you.
Good, yeah, appreciate it, Sean. Always happy to do it. It's a great show. It's a good time, and I always enjoy chatting.
Yeah, so please check out FarmLink Marketing Solutions. Jon Driedger is one of the analysts there. He's been there for quite some time, and he's one of the best. So, John, thanks a lot.